Hey guys, Mike here. So this week is going to be an insane week, and I'm not even exaggerating with everything that is happening this week. With, will there be a bank run tomorrow? Will people go by banks and see lines a mile long? I'm sure you've seen these pictures right here where people are just standing out. And this ain't just in America, by the way. This is like in the UK as well. They're standing there like trying to get their money out and stuff. And when I say insane, I mean just to get into this. Look at what we got going on, man. I mean, starting Tuesday, you're going to have CPI data come out. You see the forecast, you see what it was, and then you got PPI the next day. Don't really care about Thursday's building permits. Friday, though, what's going on? Michigan consumer sentiment. Let me go ahead and shock you and say, probably going to be bad, but more important, you know what's happening? March OPEX, monthly options expiration. So, boy, we always know that's going to be volatile, but then you throw fuel on the fire, what's going on with the banks, which we're about to get into, because a lot of people are saying there's going to be a bank run Monday, and that's really what we got to think about, right? Because I talked about it a little bit yesterday, but, the big thing is, and again, I told you the market tries to take full advantage of this kind of stuff, whether you want to call it fear-mongering or whatever, but, the fact that what creates or what really holds up our financial institution in the first place is just faith in the system, right? Because what happened in 08? The faith got rocked and people started hauling butt down to all these banks across the country trying to pull all the money out, right? Which that's what creates a snowball effect and causes major issues, okay? And so, and that's one thing that happened with this Silicon Valley Bank was people started trying to pull the money out. They started having to sell bonds at a major loss to try to cover all these deposits, right? So it just basically sped up the process and put them in deep trouble. Now, looking real quick, because we're going to get into that right there, get into the charts, get into something very important as well that you need to hear. Now, here's the estimates for Tuesday. I'm going to go ahead and get this out of the way. Estimates around 6.1 from all the big boys. All right, that's what they're expecting. So about a 0.3, 0.4% drop. Obviously, if that comes in hot and higher than expected, that just puts more downward pressure, right, on us. And plus, the reason why is they're going to say, oh my God, because right now, it's really up in the air, right, whether or not they're going to do 50 basis points now because of what's going on with the banking system and stuff. And so, but if that comes in super hot, guess what? They don't really have much of a choice. And I'm going to get into what the Fed and the Treasury said, because the Fed's doing an emergency meeting. The Treasury just came out with a big statement like 2 hours ago. And so we're going to get into all that stuff. And when you look right here, Janet Yellen says, guess what? No bailouts, baby. Ain't going to happen. This came out today around 2 o'clock. And you can see they said, look, the reforms are in place. I think she's referring to when they did Dodd-Frank and stuff, that they shouldn't have to be bailing out banks like they did in 08. And so we're going to see how the market reacts to that, because the market loves bailouts, right? It depends on the government to come in and backstop everything. And that's why, of course, people get upset because, all these executives or whatever take plenty of risk, and then they blow it, and then what happens? The government swoops in and bails them out. Now, and this is what I was talking about, what really happened to the Silicon Bank. Customers have been flooding the bank with requests to withdraw their money, and earlier last week, SVB said it had to sell bonds at a steep loss in order to meet the request. That announcement worsened the panic over SVB's financial situation and led to even more withdrawal attempts until regulators had to step in. Now, this isn't just here, this is also in the UK, right? So regulators in the United Kingdom were also working on a plan to ensure that customers of the SVB's UK branch were paid. Now, this is where we're talking about contagion, spreading, right? So here, I showed you a bunch of companies yesterday that had money there. Then you got a company like Etsy, for example, right? They're telling their people, yes, receiving payments is going to be delayed because they had a lot of money in the bank, and that's where they were getting the payments processed through, and so that's probably not going to happen. So we're going to see a lot more companies come out, see how it affects them, see how it affects their stock, which obviously will affect the indexes. And then, of course, I don't know if it's still on the table or not, but U.S. discusses fund to backstop deposits if more banks fail. And this is the FDIC we're talking about. So we have to see if they do that or not. And that freaked people out because they're like, wait a minute. They read the phrase, more banks. Well, there's more banks, right? But what they know is if there's a run on the banks, this is what's going to cause a major problem. So they're going to have to try to back them. And so, again, it's just whether or not, and tomorrow's going to tell us a lot, right? I mean, Wednesday, Thursday, Friday, people were lined up in the freaking rain. we're going to have to see. I mean, you know, my son's out of school, so maybe we'll take a drive around and look at some banks or whatever. But I can promise you there has to be some bank managers at night when they're going to bed. They're going, please do not let me go to that bank tomorrow and have people lined up before we even open, right? Because if that's the case, you know, there'll be a lot of calls, to say the least, into some of these different entities of the government saying, we got a problem, right? And here's how they're going to, and this is the reason why. The Fed actually called an emergency meeting today. Actually, I'm sorry, they called it, scheduled it for tomorrow morning, but they announced it today. And what they're going to discuss is they're going to review and determine the advance and discount rates to be charged by the Federal Reserve Banking during the meeting. And what they're talking about here is something called the discount window, right? And this is where banks can go to the Federal Reserve and take out money at usually a much higher interest rate to meet their liquidity needs, where they're thinking about bringing that down to make it easier for banks to meet their liquidity needs if needed, right? Because this is, I mean, it's crucial. They have to do this. It's the backbone of the country, right? The credit markets, the banks, all that stuff. And so, you know, and the problem what you have happening right now is you got Bill Ackman and others. I mean, they're stoking all kinds of fear out there, right? I told you this is what they would love to see this, right? Because then they can pick up stocks at a major discount. You know, there's a lot of damage done along the way. They could care less about that. That's what I was talking about. Big boys love to take advantage of this one, okay? And I'm sure some of you are probably hoping, yeah, I hope there is a run on the banks and the market just absolutely tanks down to 2,000 or something, right? I mean, that's what a lot of people are wishing for. But, you know, we'll see. Let me know in the comments if you're one of those people. Now, I don't know, because remember, the Fed is entering their blackout window, right? It starts March 11th through the 23rd. I do not know if that actually pertains also to what's going on with the banks. Are they allowed to speak on that? Because they're not allowed to speak on interest rate hikes or CPI or anything right now. They will do that through proxies like, you know, NikkeiLeaks and all these others. And just so you understand what this other bank set at, and I touched on this yesterday, and what drives me nuts here, this is the largest commercial banks, right? Look at JP Morgan, Bank of America, Citi, and Wells Fargo alone. Those four banks, these are trillions. Okay, so this adds up to be roughly, I think, $9 trillion in assets right there. And when you just look at that, that's insane to have that much just sitting in four entities, for crying out loud. Look at the rest of these banks. These are billions, okay? Still a lot of money. And then if we scroll down, you'll see our friends right here at Silicon Valley, around $209 billion. I've seen $150 billion, but this was at the end of the fourth quarter of 2022. And so it must have shrank, obviously. But, you know, just having, eventually, this is going to be a major problem, because you can almost add up probably like 25 to 30 of these banks before you get to just what the top four hold in assets. And I mean, that is just dangerous to me. And if we do have more banks fail, they're going to pick it up, you know, pennies on the dollar, you can guarantee. And the big question is too, you know, and you can talk about this in the comments as well, what you're doing, but understand there has been a record amount of people going into bonds, right? Investment grade bonds, government bonds, safe bonds, things like that, right? And into high grade, like, you know, blue chip companies and stuff. And you can just see that's a lot, okay? And if you don't believe me, just look at what's going on Treasury Direct, right? I mean, this is amazing. Look at this chart right here, which goes all the way back to 2002. Look at that. That's Treasury bills. Boom! $12 billion in January alone, which is a record, okay? And I told you, what have you heard people saying? For the first time ever, they bought bonds, they bought treasuries. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And let us know down in the comments, have you used Treasury Direct? I mean, I know I have. I mean, people who've never even thought about touching bonds are getting into them, right? A lot of people talking about CDs and money markets for the first time in a long time. I wasn't sure we'd ever be able to talk about that again for the rest of my life, just because how the Fed and the government just been suppressing the rates and stuff. But, you know, if you look right here, that leads me into the market, and, you know, the weekly range is huge right now in the S&P. You can see right here, we talked about the chart yesterday, obviously falling below that trend line again, below the 200, below the 2020 anchor VWAP. And this is what the options market is expecting. Anywhere from 373 to a little over 398, right? So about a 7% range. Again, markets usually end up in this range about 6 to 8% of the time, which is pretty high. But again, a lot of stuff going on this week, right? And, you know, getting into Tesla and a few other charts here, you can see Tesla. You know, this is the weekly right here. And I mean, the chart looks pretty ugly. But here you got the January low it had. It's still trying to hang on to that anchor V right there with that big gap below, starting around 154. And when we look back, this is the range you got to watch right here, because this is a straight up support resistance flip, right? A lot of support there, but then what happened? Rejection, 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 boom, sell off. And so that is major, major resistance now is what it comes down to. Plus that trend line that's been coming down, the descending trend line right there as well. So Tesla is definitely in a precarious situation. I think it's going to basically go with how the market goes. We'll see if they get to fill that gap finally, or do people start stepping back in on this one. And then Apple, this is the big one, right? I told you got to look at these big boys, because even when the market looks like crazy, it's not really moving down that much. But you can see right here, major resistance right there, okay? Major rejections right there. And then here what it is, the 200 moving average. That's what it saved the other day. Can it maintain that 200? Because it's one of those stocks that really tends to respect it. Right there, we dropped below it for a couple of days, but able to move back up. But you can see rejection, 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 support. And so this is the big one. If it falls below and the market continues to sell off, then you're going to see the S&P, and especially the Qs, absolutely take a dump, because it accounts for such a high weight in both those indexes, right? And of course, will we continue to sell, right? This is smart money, dumb money. Smart money is the bottom, all the way at the bottom there, but it's usually the big orders. That's the difference in what they look at on this. And you can see we've been selling like a madman, and all of a sudden, big monies, big orders are actually trying to come in a little bit as the S&P falls. And of course, what always correlates to this, if you ever get bored, is the fear and greed index. Either one you look at is fine. I use another one for the members, but this is probably the most popular, most people know, and it's at extreme fear at 24, and that was quick, because 30 days ago it was almost at 70 at greed, right? And so those usually go hand in hand. I can always tell when retail is selling out like crazy, because usually the fear and greed index is way down, and when you get fearful, that's usually when those big orders come in for big money and everything. But this just goes to trying to, you know, put as much fear in the market as you possibly can, to push it down, and that's why you're seeing key levels being broken, which of course from a chart perspective is not good, right? But then of course from a sentiment perspective, it's not good. And when you combine both of those, now we'll have to see how far we go. We hit extreme fear on the other one that I like to look at, you know, which I think we're only a couple points away. Then things are definitely going to get interesting, because again, going through this real quick, Monday, all you're looking for to see if the banks are getting run on. That's all you're looking at. See if the fear mongering worked over the weekend to get people to try to pull money out, right? And that's what I was saying. If they pull it out, is it going to go into bonds and other places? Is that where it's going to go, right? That's what you got to look at on that one. 2, obviously CPI on Tuesday. If it comes in higher than expected, what do you think is going to happen? It's going to put way more pressure on the market. Now, if it comes in at what it's supposed to be, forecasted, or even better, was it a once-off with the new calculations, the new weights and things like that, then, hey, you absolutely could see a really nice bounce. That's for sure. No ifs, ands, or buts about it. And it'll be big money bouncing us. That's what's going to happen, right? And then, of course, you're going to have your other stuff coming out, PPI on Wednesday, which is what, you know, a lot of people can look at. But really, it's OPEX on Friday, right? Monthly OPEX expiration and all of this mess. It's going to be the one thing we know this week for sure, without guessing about it, extremely volatile. I think we're going to see huge swings. Algo's kicking in like a madman, right? And so, you know, and we got to see how the market's going to accept the fact there is no bailouts for the banks. They are thinking about starting a fund to help with the accounts that were uninsured, the ones over 250K, right? How many more companies are going to come out and say, yep, we're affected by this. We're either not getting our money back, or we can't make payroll. That's the other big one, because remember, this is going to be tech companies, because this one, that was their niche, tech companies, right? And you've already seen Roku and a whole bunch of them. I showed you the list yesterday, and more will continue to come out, right? Especially if they can't make payroll, or they're struggling to make payroll. Like, that'll be a huge news. We got to see how the market is going to take that, right? Because tech's already been under pressure because of the rates and the environment we're in and stuff like that. But that just, you know, it's like fuel on the fire, basically. And so we're going to have to look at that as well. And so there's a lot of uncertainty. And what does the market hate? Uncertainty, right? And so that's what we're going to have to look at. Let me know in the comments what you think is going to happen, right? Anyway, so that's where we're at. Hit the like and subscribe button if you got anything out of it. Let me know what you think. And I'll see you tomorrow for what's going to be, I think, every day, a very fun day.